Hey everyone, in this video, I want to answer which one I think is the better stock to buy, PayPal stock or SOFI stock. Now to answer that question, I'm going to look at these two companies' valuation, I'm going to look at their risks, and I'm going to look at their profitability.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So let's get right into it, starting with the risks, because usually for me, what's more important is keeping my money, not growing my money. I look at keeping my money first, and then I look at what kind of growth can I earn on my investment. So let's start with the risks here with PayPal. And the first risk I'm going to highlight with PayPal is that it's losing millions of customers every month, and this streak is extending. I have here PayPal's active accounts, which peaked at 435 million in the fourth quarter of 2022 before falling to 433 million and then falling to 431 million, and then the losses accelerated in the most recent quarter, falling to 428 million. Now, this is a risk because we don't know how much longer this streak will continue and how many more millions of customers PayPal will lose. PayPal makes money every time a customer uses PayPal to conduct a transaction. So with fewer customers, that means fewer transactions and fewer revenue that PayPal can generate, and that's a big deal. The next and last risk I'm going to highlight with PayPal is not only that is falling customers from millions and millions of customers, but also the decreasing transaction profit margin, which peaked at 51% in the third quarter of 2022, and it too is falling in a streak down to 49.7 to 47.1 to 45.9 down to 45.4. This is the profit margin from those transactions I talked about earlier with PayPal. The primary cause for the decrease in this transaction profit margin is that PayPal is having to offer merchants better deals in order to accept PayPal as a payment method. And this too is a risk because that means lower profits for PayPal. And because this is a streak going and going and going, it's concerning for investors who don't know how much longer this decrease is going to last. And so these are the two major risks for PayPal stock investors right now. Okay, moving on to SOFI and the major risks I want to highlight with SOFI. Number one being that SOFI is attracting billions of dollars of customer deposits. That's true. But at the same time, SOFI is promising to pay these customers a hefty interest expense for those deposits. So what I have here is SOFI's interest-bearing deposits, which are over $14 billion as of the third quarter of 2023. And SOFI pays on average 4.12% for these interest-bearing deposits. That means every month SOFI will pay these customers with $14 billion, they will pay 4% at least to these customers. That's a lot of money that's going out from PayPal's pocket every month, going out and into customer accounts. And so this is a risk that means SOFI needs to continue finding profitable ways to lend this money that customers are depositing with SOFI so that it can earn a reasonable return on investment. Otherwise, the money will be going out and not enough money will be coming back in to make up for that difference. So SOFI needs to earn enough interest from its lending products to pay out that 4% to customers with those $14 billion in deposits. And the loan portfolio is precisely the next risk I want to highlight for SOFI. SOFI under pressure to continue making loans because it has to pay that 4% to that $14 billion in customer deposits. So it needs to keep making loans. It can't let that money just sit around because otherwise it's losing 4%, has been making more and more riskier and riskier loans. I have here SOFI's loan portfolio, and you can see personal loans, student loans, and home loans, and more so, personal loans are taking up a greater and greater percentage of its overall loan portfolio. As of the most recent quarter, $14.177 billion of unpaid principal out of the total $20 billion of unpaid principal on SOFI's balance sheet. So more and more so, SOFI is becoming a personal loan company. And remember, and SOFI management has also highlighted this, the default rates on personal loans are nearly 10 times higher than that of student loans. And so SOFI has taken on riskier and riskier debt because it needs to maintain, it needs to earn money on that billions of dollars of deposits that are coming in. So that's the second risk for SOFI that SOFI stock investors need to pay attention to. Okay, so the next thing I want to compare here is SOFI and PayPal. I want to compare their net income, and you could see here PayPal has generated billions of dollars in profitability. This is as of the most recent update. The trailing 12-month net income came in at 3.7 billion for PayPal, and SOFI was negative 388 million. SOFI management has said that they expect to be profitable on the bottom line in the fourth quarter of this year, so the next quarter. But that doesn't mean they're going to be profitable from then on. They just said they will achieve profitability in the fourth quarter of this year. So let's see if they will hit that target. It looks like they will be profitable in the fourth quarter. All signs point to the fact that they will be profitable. But let's see if they can sustain that or even grow profitability from that point. The next thing I wanted to highlight is the percentage change in total assets between these two companies. The percentage change in total assets. I highlighted earlier SOFI's growth in customer deposits in the billions of dollars. SOFI's also used investor capital to make acquisitions, to enter into different technology sides of the fintech industry. Also, they just recently acquired a home mortgage company to get itself into the home loan industry a little bit with a little bit more momentum. And so SOFI has been growing and growing and growing. And look at that growth rate, 226% growth in total assets compared to just 8.61% growth in total assets for PayPal. Now, the reason this is concerning is because, number one, when you're growing your asset base at such speed, it becomes difficult to absorb those assets and digest those assets effectively, right? You're doing all of these things all at once, and it becomes hard to manage that effectively. And so you get boggled down, you get confused, things get out of order, and there's some waste in that process because you're trying to grow too quickly. Okay. Another concern with SOFI's rapid growth in assets is that it's still generating negative in terms of return on assets and return on invested capital, although also the trend in improvement also decreased. So what I have here is SOFI and PayPal return on assets and return on invested capital over the last several years. And you'll notice PayPal has been solidly positive 4.91% in its most recently updated period, and SOFI at negative 1.75%. The troubling thing with SOFI was that it was making rapid progress towards becoming positive in that, and then it turned negative in the most recent quarter. And the same thing with its return on invested capital, which turned downward in the most recent quarter. Now, investors should keep a close eye on this, and I know I will be, in seeing if this is a trend that develops with SOFI. Is it going to continue moving downward in this metric, or was it just a one-time thing, a downward step, and then it's going to move back upward? I'm going to be watching that. PayPal, solid 12.34% return on invested capital, 4.91%, decent return on assets. Also moving downward for PayPal, so that is a concern. Will it continue this trend upward from the bottom, or will it continue moving downward? This is something I will be watching as well. And finally, I wanted to compare these two on valuation, and I chose to use the forward price to sales ratio because SOFI has not yet delivered consistent profitability for me to use anything earnings related with comparison. PayPal is excellently profitable, no problem there. It's SOFI that causes me to use the price to sales ratio. And according to this metric, SOFI is more expensive at a price to sales of 2.6 compared to PayPal with a price to sales of 1.833. So given all of these factors we looked at, given the profitability, given the return on assets, given the risks that we looked at with PayPal stock and SOFI stock and the valuation, if I was to pick one of these two stocks to buy today, I would pick PayPal stock. That would be my choice for one of these two stocks to buy today. In fact, I do own PayPal stock. I do not own SOFI stock. So if I was to pick, I would pick PayPal stock to buy today. But before I let you go, if you gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you for watching.